In today's video, I'm gonna show you guys how to use Bookmap to find high reward to risk ratio trades. It doesn't only work on buy side trades, it also works on sell side trades. Now, before we get into the setup, let's talk about what you're actually looking at the chart when you're looking at Bookmap. Just think about the bigger the bubbles, the more aggression to that side. So if it's a green bubble, the more aggression to the buy side. If it's a red bubble, the bigger it is, the more aggression to the sell side. Then as we look at these horizontal lines going across the screen, this is going to be resting orders or resting liquidity in the market. If it's above price, it's going to be resting limit sell orders. If it's below price, like down here, this will be resting buy orders. Now, I want you guys to pay very close attention. Notice right up here, I'm going to scroll this back right here. If we look right over to the right, we can see we had right around 80 contracts sitting here at 24,975. And if you look, we had a swing point here, here. So is it any really surprise when the market breaks? This is the area that it runs to. Now, there's two trades that can be had here. One, as you see this big bubble here and we're getting above it, we can play up towards that liquidity level. However, the trade with a higher reward to risk ratio is going to come once we get to the liquidity level. We need to see one, price getting to the liquidity level like we got here. And then criteria number two, we need to see a large bubble forming, which shows that we're going to get absorption at that market. It shows that buyers got aggressive up there. Now, the third component is going to be that if we're looking for a sell side trade, we see a big bubble up there. Once we get back below that bubble, then we can be on the sell side of the market. And just to put this in context, if we were to short at the bottom of that bubble, we'd be getting shorted somewhere around 24,970. At the top of that bubble, you have your stop loss at 24,976. And just to put this in perspective real quick, from 970 all the way down here to the low, it went down to about 24,919. And by no means am I saying you're going to get the whole entire move. I'm just showing you what the possibility is. Then from that point on, we can look to how we want to actually structure the trade. Now, if we look at a conventional chart, here's what it's going to look like. Here's that last breakout and the liquidity was resting right up here. And this is what you're probably more accustomed to seeing. Now, a lot of traders will see this big buy candle right here. But if you're using a tool like Bookmap, you would know there is resting liquidity there, AKA potential resistance, and that we could be getting ready to take a turn back down, or at least at minimum, sit there and pause. So one of the easiest ways to structure a trade would be just simply go for a 2-to-1. So in this example, if we're looking to risk 6 points, then we can look to target 12 points. So from 970, all we have to do is go down to 58. And you can see we quickly made it on this move right down here. So now I fast forward real quick down to about 11:18 in the morning. Notice we have this liquidity right here, which is going to be criteria number one. And if we look, we actually have 66 contracts on the books at that level, roughly 24,870. Now notice, as we come into that level, we have a large bubble. That's showing us that sellers got aggressive into that move. Now, the last thing we want to do as traders, or at least for myself, is once that we have a prolonged move, I do not want to be shorting near the lows of that potential move. And now here's where the setup comes in. One, we have the liquidity. Two, we have the absorption taking place there. Number three, all we got to do is get back above that bubble. Now, in this case, we can put our stop loss either right below the bubble or right below that prior liquidity level. They're kind of one and the same. So stop loss would be about 24,868.25. Your entry would be at 24,874.5. So in this case, once again, we're looking for roughly a 6-point stop loss on this trade. Now, does the market move 12 points in our favor once we break that bubble, so right around this area, without going back down below that level? Well, if we look right here from, we'll even say 875, well, did we go higher than 12 points, which will put us at 24,887. If we look right up here, we made it all the way up to 24,894. Now, if you're a trader that likes to trail your trade, then you can find some other aggressive ways to manage that trade. Now, if we come back and we look at that period on the chart, right over here, after we had that prolonged down move, this is the move we were trying to play on the bounce. Now, unfortunately, it did not reverse the whole entire move, but if you're only looking for a 2-to-1 or maybe a 3-to-1 reward to risk ratio, well, guess what? We have a very well-defined where the stop loss goes, where the trade is then validated at, and we have a perfect trade location for the entry. Very clean, very simple, something that can be repeated time and time again. Now, there are going to be occasions where we take the perfect trade setup, and guess what? You will have losses within this trade. No trading strategy is going to be 100%. So now let's go ahead and replay this and see what the trade actually looks like in live action. First, we're going to start off with the sell side trade. Simply going to go ahead and hit play. Now with Bookmap, I can go ahead and fast forward the previous data that I've had recorded. Every day the market's open, I go ahead and replay the data. Now look, here's the liquidity level. Here's the big bubble right up in here. And if you guys want to be able to trade in a simulated environment with Bookmap, then you click this little button here and it'll open up a chart trader window and you could go ahead and place a trade and work on placing a trade. But let's watch this real quick. This is sped up. Once we start to break below the low portion, so right there, looking to get into the market, and let's just see how this feels as we're coming down. Notice we've also had the cumulative volume delta right up here, spiking up and now on the way back down as well. And notice, do we see any liquidity down here? Not yet. So we can simply just sit there and ride that out. Now, if you're only looking for a 2-to-1 reward to risk ratio, let's say that you got in right down here at 962. Well, if we know that we were risking roughly 6 points, 962, we went all the way down to 946. That is more than a 2-to-1 reward to risk ratio on that trade. Now let's go ahead and fast forward and look at the buy setup that we had. All right, so now let's go ahead and look at the buy setup. I'm gonna go ahead and hit play right here. Notice right down here is the liquidity. Now I do have this sped up right now 4 times speed. I'm probably gonna speed it up just a little bit more just so we don't waste too much time. Now notice we came right there, we got the liquidity. Now all we're doing is waiting for price to get back above the red bubble there. Then we can look to enter the market. Sometimes we'll go a little bit lower like we did there. So now we would be entered into that trade. Now we roughly have a 6-point stop loss. So 874, we're looking for 12 points. So we need to see, does the market go to 24,000? We'll call it 886. And if so, this would be another winning trade if we're only using a 2-to-1 reward to risk ratio trade. One thing to note with a 2-to-1 reward to risk ratio trade, you only have to be right roughly 34% of the time in order to break even. And look at where we're at right now, right up in here at 887. Now notice, what do we have right above us? Do you see this little bit of liquidity we have right up in this area? So is it going to be any surprise if the market wants to turn back down from that area? Not really. And let's see, do we turn? There we go. We turn right back down from that liquidity level. And this is why you need to be able to incorporate order flow into your trading. You need to be able to see not only the orders are being executed, the aggression between the buyers and sellers, but you also need to know where those resting limit orders are lurking. If you're looking for a big breakout, where might you find some resistance in the market?